We are diving straight into the arena of defense tech today, and we're tackling one of the biggest questions in AI investing right now.
Right.
Is BigBear.ai, that's ticker BBAI, finally ready to become the real deal, to shed that baby Palantir nickname for good?
Well, it's a nickname that's followed BBAI for years, and most of the time, frankly, it's been dismissed as just retail hype.
Pure speculation.
Exactly. For the longest time, the fundamentals just weren't there to support it, but the analysis report we've been digging into suggests something has genuinely shifted.
Real change.
A real change. We're looking at a confluence of events all happening in the last 72 hours, where it seems like data-driven reality is finally catching up with the story.
And you can see it in the market's reaction, which has been, well, swift and certain. The whole reason we're doing this deep dive is because of the explosive move we saw yesterday.
A 9% surge.
A 9% surge in a single day. It just smashed through a huge resistance point to close at $6.41. When a stock like this moves that hard, you know there's something real driving it.
And that's our mission today, right? To understand the why behind that move. This analysis lays out three distinct, mutually reinforcing reasons why that next Palantir idea is gaining traction now.
So what's the plan?
We're going to walk you through the two big fundamental catalysts from this week. Then we'll break down the core valuation comparison to Palantir to PLTR, and then finally look at the technical chart breakout that just happened.
Okay, let's unpack this because the report is really emphatic here. This isn't speculation anymore. It's about a company fixing its biggest weaknesses while, hitting the accelerator. Let's start with that growth engine they just bought.
Right. So the first catalyst is it's a total game changer for BBAI's position inside the government. The analysis calls it the generative AI for spies deal.
Generative AI for spies. Tell us the details. What exactly did they acquire?
So on January 1st, BigBear.ai finalized a $250 million acquisition of a company called Ask Sage. And look, this is not your standard software buyout. No. Ask Sage is a generative AI platform built from the ground up for the government. It's designed to handle the super specific, highly sensitive data that you find in defense and intelligence.
So give us a quick example. What does a tool like this actually do? Is it just sorting spreadsheets or is it more than that?
Oh, it's way more. And this is why it's so valuable. Imagine you're a military commander and you are just buried under terabytes of drone footage, signals intelligence, field reports.
Information overload.
Total overload. Ask Sage uses large language models, but they're trained only on classified military data to give what they call AI decision intelligence.
So it's not just summarizing.
Not at all. It sifts through everything and gives you actionable, real-time recommendations. It'll flag an anomaly or forecast a potential threat. It's basically an AI brain helping you make high-stakes decisions.
And the detail the report keeps hammering is that this isn't some beta test. This isn't something BBAI has to spend years pushing through bureaucracy.
Exactly. That's the genius of the move. And it's the core of the Palantir comparison. The analysis points out that Ask Sage is already deeply embedded. It's already being used by 16,000 government teams.
16,000.
Yeah. Palantir grew by getting inside the Pentagon and proving its value immediately. This acquisition gives BBAI that same instant proven channel. They get to skip years of sales cycles and get immediate access to a massive user base. It's the ultimate shortcut.
Okay, so they've added the jet fuel, the growth potential, the proven channel. But BBAI has always been held back by something, well, a lot less exciting than technology. It's financials. The second catalyst tackles that head on.
It absolutely does. If Catalyst 1 provided the growth, Catalyst 2 removed the single biggest barrier to serious investment, what the report calls the ugly balance sheet.
Yeah, so for anyone listening, why was the debt situation so bad? Why did it keep the stock on the ground, even when the tech was promising?
It all comes down to leverage. I mean, a lot of tech companies have debt, but BBAI's leverage ratio, how much debt they had compared to their assets, was just seen as too high.
And that matters to the big players.
It's critical. Major institutional investors, think big pension funds, mutual funds, they operate under really strict rules that literally prevent them from buying companies that are too leveraged.
So it wasn't that they didn't want to buy it, they legally couldn't.
Precisely. They were shackled. The high debt was like a giant red flag saying, high financial risk, institutional money, stay away.
So what was the announcement on January 2nd that changed everything?
They announced they were redeeming $125 million in debt.
Wiping it out.
Wiping out a huge chunk of it. This move fundamentally cleans up the balance sheet. It improves their leverage ratio overnight. And this isn't just a small tweak, it's a structural cleanup that changes who is allowed to buy the stock.
That makes so much sense. It's a perfect 1-2 punch. The Ask Sage deal gives long-term investors a reason to get excited about growth.
And the debt cleanup opens the door and rolls out the welcome mat for the institutional money to actually come in and fund that growth.
So they've solved the two biggest problems.
Exactly. A real product channel that's already working and a balance sheet that's clean enough to attract serious long-term capital.
All right, now that the foundation is set, let's get to the core thesis of this analysis. Why does everyone keep comparing this company to Palantir, the, undisputed king of government AI?
It's fascinating because the mission is almost identical. Both companies are focused on AI decision intelligence, mainly for government and defense. The analysis nails it when it says it's the same mission, different scale.
Let's talk about that scale difference, because that's where the opportunity is. Palantir's market cap is massive, hundreds of billions. BBAI, even after this run-up, is sitting around $2.8 billion.
And that's the core of the bull case right there. That huge gap implies, well, tremendous room to grow. The analysis argues BBAI has massive room to 10x just to catch up to a fraction of Palantir's size.
So with Palantir, you're buying the mature giant.
Right. And with BBAI, you're betting on the aggressive growth spurt phase. You're buying into a story that could have a decade-long runway.
But let's get into the pricing, the valuation, because this is where the argument gets really provocative. Palantir is seen as priced for perfection. It trades at something like 180 times its sales.
An astronomical number.
It is. Meanwhile, BBAI is trading around 14 to 16 times sales.
That difference in the price-to-sales ratio it's just staggering. It tells you everything about how the market sees risk versus certainty.
So what is it telling us?
Well, a stock at 180 times sales means the market has already priced in years and years of guaranteed high-margin growth. Every dollar of sales Palantir makes is incredibly valuable because investors trust their execution completely.
And BBAI at 14 times sales.
That tells a very different story. It means the market is still skeptical. It isn't trusting BBAI's ability to grow revenue or, more importantly, turn that revenue into actual profit.
Which is where the report sees the significant catch-up potential.
Exactly. If BBAI can execute, which the Ask Sage deal suggests they now can, that valuation gap starts to look unsustainable.
Okay, let me play devil's advocate here for a second.
Yeah.
This whole thing hinges on growth. Palantir is already profitable, a safe, mature giant.
Right.
BBAI is still losing money. So it's talking about a 10x return, just, wild speculation until they can actually show a clear path to profitability.
And that's the essential trade-off. You are absolutely right to be skeptical. BBAI is the high-risk, high-reward play. It's a bet on exponential growth happening before profitability is locked in. The analysis doesn't hide this risk, but the argument is that cleaning up the debt shows a real commitment to financial discipline. That's a huge step towards attracting the kind of patient capital you need to get to profitability.
So boiling it all down, the argument is that if BBAI can achieve just say 10% of what Palantir has done in the government space.
A pretty modest goal, really.
Then the stock is fundamentally undervalued at that $6 price point where it was just a few days ago.
Precisely. The valuation gap, plus the two catalysts, suggests the market hasn't fully woken up to BBAI's improved strategic and financial position.
Okay, let's shift from the fundamentals to what's happening right now, the charts. Because the technical action really seems to confirm that people are reacting to this new story.
The chart pattern is classic. It's a great roadmap for the momentum here. The analysis highlighted a really clear rounding bottom recovery.
And what does that mean for the listener?
It's a pattern that shows the stock spent a long time consolidating, recovering from lows, and just patiently building a strong base of support.
And that patient base building hit a ceiling, a clear one. The report notes the stock was stuck at $6 for weeks. Why is that number so important?
It's both technical and psychological. Technically, $6 was where sellers were just exhausted. Anyone who bought months ago was just waiting to sell and break even right at that price.
And psychologically?
Psychologically, it was the barrier between the old, stagnant BBAI and the new growth story BBAI. For weeks, every attempt to push higher just got rejected right there.
But yesterday, that wall came down.
It didn't just come down, it was smashed. The stock didn't just wobble across it, it closed decisively at $6.41. But the real story is the volume.
Right. A breakout needs conviction, and conviction is measured in volume. The source says 93 million shares traded. What does that tell you?
It screams institutional confidence. A low-volume breakout can be a fake-out. But when 93 million shares trade hands, a huge surge, it means big, smart money institutions are buying up every share that the old holders were selling at $6.
So high volume confirms the breakout.
It confirms it, and it flips the dynamic. The old resistance at $6 is now officially the new floor of support.
So the stock is free from the $6 shackles. Institutions are pouring in.
Yeah.
What's the immediate target now? Where are the technicals pointing?
Well, analysts are looking up, and the report cites a lack of any major resistance overhead in the near term. So the immediate technical forecast is a move to fill a gap towards the previous highs.
Around $8.
Around $8, yeah.
And that $8 target, that represents about a 25% upside from where it is now. So it gives you a clear, tangible metric to track this momentum.
Exactly. It connects the trading action directly back to the fundamental story. The chart is just reacting to the clean balance sheet and the new growth engine.
Okay, let's bring this all together. Let's synthesize this for everyone listening. In the last week, BBAI has basically solved its two biggest historical problems.
That's right. They've installed the jet engine with Ask Sage, getting immediate access to 16,000 government teams and high-margin revenue.
And at the same time?
At the same time, they fixed their biggest financial weakness by paying down $125 million in debt. That cleaned up the balance sheet and unlocked the door for institutional capital to finally come in.
And those two fundamental fixes were immediately validated by the market. We saw a huge technical breakout above that critical $6 level, all on massive volume.
The analysis gives a really compelling verdict here. It says, if you miss that early, high-risk, high-reward growth stage of Palantir, BBAI is showing all the classic signs of a company making that same transition. It's moving from being a small, debt-heavy player into a scaled-up, financially viable defense AI company. Still risky, yes, but the bull case has never been stronger.
So the sources really give you a full integrated roadmap. They explain exactly why this stock is dominating the conversation right now. It's that rare alignment of a balance sheet cleanup, a strategic buy, and pure market momentum.
It's the story of a company deliberately removing the things that were holding it back so it can accelerate into this huge defense AI market.
So we know the immediate technical target is $8. But the bigger bull case, the one rooted in that Palantir comparison, suggests a much higher destination down the line.
And that's the final question this analysis leaves you with. $8 might be the short-term stop. But if BBAI keeps executing like this, if they start converting those 16,000 government teams into recurring revenue, the market will have to start reevaluating everything. Is the $10 mark the next critical psychological and technical frontier for BBAI? That's